we're diving deep today into low-cost mutual funds.
So
We've got a ton of research on this topic.
yeah,
Let's see if we can really unlock the secrets to long-term growth.
absolutely. Long-term growth, that's the key, isn't it?
Yeah, for sure.
It's not about getting rich quick.
Right.
It's about that slow and steady wins the race
Yeah.
kind of philosophy.
So before we go too far,
Yeah.
can we remind ourselves,
Sure.
like, what is a mutual fund?
Right, yeah.
And why might it even be a good option for people
Absolutely.
for that long-term growth?
So think of it like a basket. Okay. And in that basket, you have a variety of different stocks and bonds.
Okay.
And you are pooling your money with other investors
Okay.
to buy into this basket that's managed by professionals.
Okay.
So the beauty of that is diversification.
Right.
So you're not putting all your eggs in a one basket.
Don't put all your eggs in one basket. That's what they always say.
Exactly. And that can help reduce risk.
Okay, so that makes sense. So now let's talk about this low cost thing.
Okay.
What makes a mutual fund low cost?
All right.
And why should we care about that?
That's where things get interesting.
Right.
Because every mutual fund charges fees
Right.
to manage your investments. And these fees are a percentage of your assets.
Okay.
Now, the difference between a 1% fee
Right.
and a 0.25% fee might seem small,
Right.
but over time, that can make a huge OE difference in your returns.
You're saying like those tiny little percentages
Yeah.
can really make a big difference.
They snowball big time.
Oh, wait.
So, for example, let's say you invest $10,000
Okay.
and you earn an average return of 7% a year
Okay.
over 30 years.
Mm-hmm.
A 1% fee could eat up almost $60,000 of your potential earnings.
Oh, my goodness.
But if you choose a fund with a 0.25% fee,
Right.
you could end up with almost $20,000 more.
So that's that whole
Compounding
thing
it's bad
working for you.
for or against you.
You're against you.
Exactly.
Oh,
So it's important to pay attention.
So are all of these low-cost funds,
That's a great question.
like, are they all created equal?
No, they are not.
How do I even know which one's right for me?
So there are different types of low-cost funds.
Okay.
And the right one for you really depends
Yeah.
on a couple of things,
Like what?
like your financial goals,
Right.
your risk tolerance.
What's risk tolerance?
Risk tolerance is basically how comfortable are you with the ups and downs of the market,
Okay.
right? So
Yeah.
some funds invest in stocks, which can be more volatile,
Right.
but they also offer the potential for higher returns.
Gotcha.
And some funds focus more on bonds,
Okay.
which tend to be more stable,
Safer.
yeah, but they may have lower returns.
Yeah.
So someone younger
Yeah.
who has more time to recover from those market dips,
Right.
they might be more comfortable with a riskier,
Yeah.
growth-oriented fund. But someone closer to retirement,
Yeah.
they might prefer that more conservative approach.
So it's really not one size fits all.
Exactly. And then there's also your time horizon.
Okay.
So if you're investing for a long-term goal,
Yeah. Huh?
like retirement,
Right.
you have more time to kind of ride out those market fluctuations.
Right.
But if you're saving for a shorter-term goal,
Okay.
like a down payment on a house, you might want to choose a less risky fund.
Makes sense.
Okay.
So let's say I'm convinced
Okay.
about low-cost funds.
Good.
What are some practical steps
All right.
I can take to start exploring my options?
All right. So first, do some research.
Okay.
There are tons of resources available online.
Yeah.
You could start by looking into index funds.
Never those.
So index funds track a specific market index, like the S&P 500.
Okay.
For example, the Vanguard 500 index fund, Admiral Shares.
Oh, boy.
VFIAX.
VFIAX.
Oh, hey.
All right, I'm writing that down.
That's a popular one.
Okay.
It's known for its extremely low fees
Okay.
and its ability to really capture that
Excellent.
overall market growth.
Okay, so VFIAX.
Yep.
What else should I be thinking about?
Don't forget about target date funds.
Target date funds.
These are designed specifically for people who are saving for retirement,
Okay.
and they automatically adjust their asset allocation
Okay.
as you get closer to your target retirement date.
So that's the mix of stocks and bonds.
Exactly.
To take some of the guesswork out of it.
Exactly.
Okay.
And a lot of financial institutions offer target date funds,
Gotcha.
and they can be a good option for people who prefer
A more hands-off approach.
more hands-off. Exactly.
This has been really insightful. I feel like
yeah.
we've learned a lot today.
Yeah.
Low-cost mutual funds
Great option.
seem like a great option
Yeah.
to grow your wealth over time,
Yeah.
but there's definitely some things to consider.
Nuances for sure.
Yeah, like those tiny little fees.
Don't let them fool you.
Right,
They can make a big difference.
right.
It's like that saying, right?
Yeah.
Investing is a marathon, not a sprint.
Absolutely. And on that note,
Yeah.
think about what steps you can take today
Yeah.
to start exploring low-cost mutual fund options.
What can you do right now?
Yeah, maybe it's researching some of those index funds.
Uh-huh.
Maybe it's calling a financial advisor.
Right.
Even taking a small step
Absolutely.
can put you on that path toward a brighter financial future.
I love it.
Thanks for joining us.
My pleasure.
Until next time.